Now, there's no doubt economic data and elections, they're intertwined, but so is the stock market. And it's interesting because it's intertwined in two ways, as a representation of the economy, but also as a predictor of the outcome. And joining me now to discuss, Walser Wealth Management President Rebecca Walser, along with Nicholas Wealth Management President David Nicholas. And Rebecca, I'll start with you. Listen, I know the financial media blaming the last few days slump on the U.S. stock market, mostly on COVID-19 and the partial lockdowns in Europe. But a week ago and 2 weeks ago, they were saying that the market was up because of a Biden victory and more stimulus. So I personally think the last 3 days are a glimpse of the kind of anxiety that investors would have to live under, particularly at the beginning with the President Biden. So what are you urging investors? Because last time I read you or saw what you were talking about, you were saying that may be true, but to remain calm. How do we do that?
Yeah, Charles, this is, I believe, Monday through Wednesday, a total overreaction. I think of case counts. And frankly, I can't wait for the election to be over because I believe the media is just hammering these case counts and hoping to get a reaction. And this is what's the result. You know, people get freaked out if they hear the drumbeat of, oh, my gosh, you know, we're going to have a second wave and it's going to be the end of the world. And that's how they couch these things. If you just watch any of the media reports, it's really ridiculous. I have to tell you, this is not the virus that we are dealing with from March and April when we had no data. We've had millions of cases. We have people now that have survived. Trump at 74 years of age is doing 3 rallies a day, crisscrossing the country when he had it 2 weeks ago. It's not the same virus. We have therapeutics, the hospitalization, and the death rates is what we need to look at. As an investor, look at the hospital utilization. Look at the death rates. When the media report is only talking to you about case counts, it is intentionally trying to inflame a reaction. Because if they're talking about hospitalization and death rates, there's nothing to be upset about. We've got it under control from a hospitalization and death rate perspective. And if this virus is something that 99% of people will survive, then we have to get back to work. And that's what they don't want to happen because they want the election to go a certain way. And I think everyone just needs to calm down and breathe. It's almost over, and then we can move on. All
right. We will. I'll do it. I'll take your word for it. Now, listen, I agree with you 1,000%. But, David, since 1984, the market has actually been uncanny at predicting the election outcome. The S&P 500 has been up 5 times for an average of 5%, and the incumbent party won all 5 times. So what's the market telling you? We were up 2.9% coming into today's session.
Yeah, Charles, that's an excellent point. I mean, right now the market is trading at a pivotal level. From a technical standpoint, I mean, the S&P has to hold 3,200. So what I'm watching, right, if we have any type of sell-off tomorrow or Monday going into the elections, that pivotal period between August 1st and the elections over the last 100 years, if the market is negative going to the elections, that does not bode well for the incumbent. So what I'm looking at for the broader market is 3,200. If we break below 3,300 from between now and Tuesday,
but right now, David, is it saying that Trump still has? Is it saying that Trump still has a chance to win? As long as we're up right now, the market would suggest that Trump would be reelected. Okay,
barely. I mean, we've got about a 1% cushion.
Barely, right? All right, let's talk about earnings for a moment because they continue to crush it. Even stocks, though, that have posted monster results have seen their shares crushed. Rebecca, what's going on here? This is like one of the best earnings seasons I've ever seen.
I know. And it's big tech that we are, talking, and we're going to get some more results today on big tech. But, Charles, it's that Section 230 hearing yesterday that I think I'm really concerned about it. And it reminds me of the German theologian Friedrich, I'm going to get his name wrong, but it's Friedrich Martin Niemöller. And everyone knows it. It's first they came for the Jews and I did not speak up because I was not Jewish. Then they came for the communists. I did not speak up because I was not communist. Then they came for me and there was no one left to speak for me. And this hearing yesterday reminded me of the Democrats. They're so pro, censorship from what I saw at that hearing that they're not going to speak up. And the Republicans are obviously on the opposite side. But the Democrats should understand the power that these tech companies are now wielding on censorship. Just because they're in favor right now, that will be turned against them. And we should not have a country that is dominated by corporate decision. And so we do need to deal with this Section 230, regardless of the earnings. I mean, I love the earnings and keep bringing them. But
here's the thing, though. Wall Street likes it no matter what. That's the one thing we got to admit. Those stocks are much higher right now.
It's true.
Rebecca, David, thank you both very much. Meanwhile,